Here now I am going to teach you the second method when separate set of books are not maintained. The second method. Okay. Now the question is, A and B were partners in a joint venture, sharing profits in the ratio of 4:1. A supplied goods to the value of 50,000 rupees and incurred expenses of 5,400. B supplied goods to the value of 14,000 and his expenses amounted to 800 rupees. Okay. So here expenses incurred for A is 5,400 and B 800 rupees. They have supplied the goods of 50,000 and B 14,000. B sold the goods on behalf of joint venture and realized 92,000 rupees. B is eligible for a commission of 5% on sales, means on this 92,000 rupees 5%. B settled the account by bank draft. Prepare journal entries in the books of A only and prepare ledger. Okay. In the books of A, journal entry. Now you can see it here. Joint venture account debited to purchases account, means here for this 50,000 A supplied goods to the value of 50,000 rupees. This is in the books of A, that's why joint venture account debited to purchases account 50,000 and 50,000. Second entry is for the expenses incurred. Joint venture account debited 5,400 to cash account 5,400, being expenses incurred. And the next entry is for being goods supplied, that is joint venture account debited to B's account. Here B has supplied 14,000 rupees goods. So joint venture account debited 14,000 to B's account 14,000. Narration is being goods supplied. Next, fourth one, joint venture account debited to B's account. See here, this is for expenses incurred. So 800 rupees expense has been incurred for B. So here joint venture account debited 800 to B's account 800, being expenses incurred. Next one is for B's account debited 92,000 rupees to joint venture account 92,000 rupees, that is B sold the goods on behalf of joint venture and realized 92,000 rupees. So being goods sold. Next entry, to joint venture account debited 4,600 to B's account. This one is for here I have showed you that B is liable for the commission of 5% on sales. On the sales is 92,000. So 92,000 into 5 divided by 100. That is 4,600. So joint venture account debited 4,600 to B's account 4,600 rupees. Being commission payable. And next, seventh one, joint venture account debited 13,760 to profit and loss account 13,760, being profit on the joint venture transferred. So here 13,760 rupees for this A. You have to prepare joint venture account. In the books of A, joint venture account, you should prepare it, and then you will get 13,760 is for A. Here profit and loss account, because this one is the A's account, so they can't mention A's account, so profit and loss account it transfers. Okay. And next thing is bank account debited 69,160 to B's account 69,160. To know this, you should prepare this B's account. Otherwise, you can't find out this amount. So in this, once again I am telling you that in this joint venture account, first you should know to prepare the ledger accounts, then only you can make the entries in the journal. Okay. So to find out these two entries, in case they have given that only prepare journal entries, then also you should prepare ledger accounts in this joint venture, because by preparing joint venture account, you may now hear the A's profit, and here by preparing B's account only you can find out this amount 69,100. So that's why, see here, this amount came from here and this one from here. So to find out this amount, you have to prepare in the books of A joint venture account. Okay, see, in the books of A joint venture accounts, here by B's account, B has been sold 92,000 worth rupees goods, you already know, and come here to purchases account 50,000 rupees. 50,000 rupees is starting entry to joint venture account debited 50,000 to purchases account, means this 50,000. So here to purchases account 50,000, to cash account 5,400. This 5,400 for the expenses incurred, 5,400. So here to cash account in the books of A, remember. So joint venture account debited to cash account, expenses incurred by A is 5,400, and to B's account 14,000. So this 14,000 is B supplied goods valued 14,000 rupees. That's why B's account 14,000, and to B's account 800 is the expenses incurred by Mr. B. And next thing is to B's account 4,600. This 4,600 is the 5% commission. Just we have calculated it. That is for 92,000, 5%. Okay, that is where it is 4,600. Now make the total of this. Here credit side only 92,000 rupees is there, and write it here and make the total, and you will get the difference amount 17,200 rupees. 17,200 rupees should be they have to divide it in the given ratio, and that ratio is 4:1. Okay, see here 4:1 ratio, they have to divide it, sharing profits in the ratio of 4:1. So here 17,200 into 4:1 means 4 by 5. 17,200 into 1 divided by 5, that's equal to, you will get this amount. And now come to second account, B's account. Here remember, when separate in this method, second method, when separate set of books are not maintained, we will prepare only two accounts. First one is joint venture account, and second one is another party co-venturers account, that is B's account. Okay, if it is in case of in the books of A, then you have to prepare B's account. If it is in the books of B, then you should prepare A's account. Now the reverse entry to joint venture account for the goods sold 92,000 and 92,000, and next thing is for see here by joint venture account, this 14,000, the B's account, all the entries of B's account you should enter it here, that is 14,800 rupees and 4,600 rupees, all these you should enter it here. And joint venture account, the profit means here for B 3,440 is the profit. Okay, so according to as per B's account, related to B's account, all the entries you should make it here in B's account, and the thing is make the total, and you will get 69,160 as a balancing figure. So you should enter bank account debited 69,160 to B's account, 69,160 being settlement made. So that's why I am telling you that first you should prepare this ledger, and next you should prepare journal entries. Okay.